Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we are going to be taking a look at Microsoft stock. This one came in by request down in the comment section of one of my other videos. If you have a request from me, you'd like me to make a video analysis on the channel, just put it down in the comments. I'll get the ticker on the whiteboard behind me here, and I will eventually make a video. We're getting through a lot of these. I think I put out probably at least 100 this year, or since I started the channel back in October, relaunched it. As always, this is not individual investing advice. This is just how I analyze stocks. Let's see here. So there's also a 25% off discount link for fast graphs down in the description. If you're interested in that, that's what I'll be using for this analysis here, along with my normal spreadsheets and stuff that you see me use. All right, let's just get into it here. So Microsoft, I've only written one previous article on Microsoft, believe it or not, because it's always been a little on the expensive side. It's never gotten super cheap. But back in 2022, it sold off, and it finally got pretty close to one of my buy prices, and I put an article out. That was down here near these lows. It might have actually come out on the day that it bottomed or pretty close to it. I think it was right down here this first week of November. And it was down, yeah, that's almost exactly the bottom, I think. Well, intraday it got to 213. So my buy price at that point, this is with a margin of safety, you know, trying to get extra returns, and before the whole AI thing took off with ChatGTP. It got down to 213. My buy price was 165, or 165 and change. So it got pretty close, relatively speaking, for some of these stocks. But I wasn't able to pick it up at a discount. And now, of course, it's up like 1,000,000% or something like that. I don't know. Let's see. Oh, that's not so bad. I mean, 100%. It could be worse in terms of missed opportunity. But if we look at the long-term earnings trajectory here, that's what I'm going to use to predict or estimate future returns. So we have, if you just look at the fast, actually, let's shorten the fast graph here real quick. Let's shorten it to, this is the from 2015 to 2025. I'm going to go ahead and pull these earnings forward to give it a little more generous valuation for them instead of using the 2024s, which are almost finished anyway. So I'm going to look forward one full year. That'll get my buy price up a little bit closer to probably what I may actually be able to get in like a recession or an AI bust or something like that. But basically what I'm going to do here is look at this time frame. If we look at the fast graph, the earnings growth rate is 15.86%. And my estimate's going to be like 14 and change percent because I take into account some buybacks that they've been doing. But basically we're looking at like a 15% earnings growth rate. But you have to remember, I'm going to project that out like 10 years. So it gets pretty hard when you're one of the 3 biggest businesses in the world to keep growing at a 15% rate for that long. So I think it's a fair earnings growth rate without getting too optimistic. Like last year, if people are assuming earnings come in 20% higher than before. If we take, and then we have the COVID kind of period here where earnings got inflated, definitely in 2021 they did. We can see that they have had faster earnings growth during this time. So the market's being very generous with a 40 PE, I think, right now. But if they really were able to grow 20% over the next decade, then, you know, that would be a fair PE to pay probably for a company as good as Microsoft. So, and again, usually they don't have any debt to speak of, which they don't really. So it's a pretty straightforward analysis. If you go back, right now I have the fast graph set up from 2015 on. Sort of gets us into the cloud computing era. We can go back and look at it. It's definitely been much cheaper in the past. I mean, it's 40 PE now. It was down under a 10 back here. But this is still during that kind of transition period when we didn't really know whether Microsoft was going to be able to kind of innovate and adapt to the new environment. But they definitely were able to do that. And so now the valuation is 4 times higher than it was back then. So it's a little hard to go back to 2008 recession and see But they fell about 50% from there, and they fell much farther from the 2000 peak. So when these valuations, and I want to say it traded at like at least a 60 PE back then. I don't have the data here because it doesn't go back that far, but it was either I want to say it was a 60-ish PE to 100, maybe even during the peak at 2000. And from that 2000 peak, it didn't fully recover its price until like 2017. So they aren't immune to very big and deep down cycles if the stock gets really overvalued. Now, right now it's at a 40 PE. That's not a 60 or an 80. So probably not going to be as bad even if we have a recession and some other bad stuff that happens. But you can see that, just in general, the market is not afraid to trade this stock at a discount. It's not immune to that. And if we look at more recent times, even back in 2022, when you need to remember there wasn't a recession in 2022, we still got down to almost a 20 PE, like we'll call it a 22 probably at the bottom. And we still had a year where earnings only grew 7%. But with AI and with cost cutting, as with Google / Alphabet and Meta, they were able to kind of stem this, well, let's call it a stimulus bust, and also just regular enthusiasm bust. So we had a 40 PE basically right back then too. So if you go but to give you an idea, if they go from a 40 PE and say earnings only grow 7% next year, something bad happens or something, I mean, we can get a read on what would happen there, which is at least a 35% decline. And then that's without a recession. So if you tack a recession on that, you can easily see how the stock could fall 50%. Pretty much no problem. I mean, nothing crazy would have to happen for that to occur. So I think, a 14 to 15% earnings growth rate assumption, and then just using a basic valuation method, we'll get a pretty decent read on a good price where someone could buy the stock. All right, so going through this process, like I said, we didn't really have much in the way when it came to debt, so there's not really much of an adjustment that needs to be made there. 14.75% is the earnings growth rate that I'm going to assume. So the way I think about that is I basically convert that PE ratio, which when we use forward earnings now, instead of 40 is only 35, is like a 2.87% earnings yield. So the earnings yield is the PE ratio inverted. So earnings over price. It says a decimal here, but usually you see it expressed as a percentage. So 2.87%. So the way I like to think about this is if you bought $100 worth of Microsoft right now in earnings and you own the business, or you just bought the whole business for $100, you would earn $2.87 using forward earnings, that $13 a share-ish that I showed earlier on the fast graph. You would earn $2.87 in earnings that you could keep as the owner. And I pull forward that first year's growth. So not only am I pulling forward next year's earnings expectation, but I'm also adding another 14% growth on top of it. So I'm being pretty generous, I think, right here with this. And so we would actually earn $3.29 the first year, and then that would grow at 14.75% each year. Not the whole 103, just the 3. And what I want to know is cumulatively, if I own this business, how much money could I collect over the course of 10 years for every $100 that a person invested? So when I do the calculations on that, my $100 would turn into $166. And what I want to know is what kind of CAGR that actually turns out to be. And that is about a 5.2% kind of a business owner's earnings CAGR, basically. And 10-year, the time frame is important. The longer you let the growth go out, the better it will look. So if you start forecasting like 20 years into the future, this will improve. But I use the 10 years kind of the standard for everything. Unless there's some special reason not to. So this is actually I would say this is a little more expensive than the average stock in the market right now, because the average stock in the market has actually not gone anywhere since 2022. barely positive, I would say, and probably not. I don't think it's the average stock in the S&P 500 is not positive if we take into account inflation. So they are actually a little bit cheaper, but Microsoft isn't like crazy overvalued. If you assume that these things are true, it would be a hold. So above 5% here, it would be like a hold for me if I owned it, which I wish I did. I don't. So I think it's a hold. I think it's a high quality stock. It's a great business. But I always try to buy everything with like a margin of safety and really cheap. And so when I try to do that, when I just do a basic earnings valuation here, my buy price with a margin of safety would be $266 now, given that they've earned a lot more money since 2 years ago, or really 3 years ago, because I'm looking forward a year. So that's about 43% lower. And then if we do have a recession like I showed back in 2008, we're looking at like more of like a 50% drawdown. In truth, I would probably start layering in, and if I just hit the basic buy price here, if something happened or whatever, maybe earnings come in a little lower than expected, I would probably take one position here and then take another position if it got like super cheap during a recession or something. So that would be my approach. And what that is, the level that this is when the 10-year CAGR hits 8%. So when that happens, usually you get more than 8%. Usually you get like 15 or better over the next few years, because usually there is like a reversion to the mean that happens as well. You get a bonus from that by buying it cheap if you can buy it cheap. And we were almost able to do that in 2022. It didn't quite come together, and then once the AI boom took off, this was actually, that was the fall of 2022, and then so once I want to say this is actually, when was the Chat GTP? It came out, I think it was this month, basically, when they announced the public Chat GTP thing, and then it pretty much took off after that. So great business. If I owned it, I would just be a holder of it. I do own like Meta. That's what I've been doing with Meta. It has a very similar, we can take a peek at it real quick. It has a very similar story. You can see the valuation looks a little bit better on Meta, but we have this gigantic decline here. And then it's probably up like 300% or something. So 500% off the bottom. Now with this one, I bought it earlier, like right in here, and I just committed to holding it long term. So I just held through this really deep downturn, and it's come back stronger. So I think when you own some of these, if they aren't gigantically oversized positions in somebody's portfolio, some of the really, I would exclude Tesla because it's cyclical. Apple's valuation looks a lot more stretched than Microsoft's. But if you look at like Meta, Microsoft, Alphabet, the valuations, they're pretty much just kind of hold them if you own them right now, I think. Because they've shown that they can just really cut costs and slim down and adjust pretty quickly to the market environment, which is what they managed to do during this downturn. You can see Microsoft's earnings didn't even go negative, unlike Meta and Alphabet. So, all right. If you found this video useful, just hit the subscribe button and the like button. I also have Patreon. I have a free tier on Patreon now. But at the $5 a month Patreon level, you can request any stock, whether it's in the S&P 500 or not. I'll give you feedback on it or make a video if you want a video. You can do that on Patreon at any time. And then if you do join that $5 tier on Patreon, you can get a big discount if you ever decide to join the full Cyclical Investors Club service over on Seeking Alpha. And I have a direct link to the Seeking Alpha Cyclical Investors Club service investing group down in the description as well. All those links are down there. Check them out. If you have any questions, put them in the comments. I answer all the comments, so just let me know. Later.